Good evening, everybody. How are you? I'm Shuchi Rungta, heading the knowledge team at Elearnmarkets, and I am here again to discuss yet another show on midweek market analysis. And I think it has been a eventful day today with war situations and markets tanking more than 4.5%. And we have lots to discuss today with respect to markets. So, to have this discussion, I have Mr. Abhijit Paul with us today, who has been in the markets for quite some time now, and he has been regular on our channel. I know you've been following his work. So, let me invite him. Hi, Abhijit. How are you?
Hi, Suji. Good evening.
Good evening. So, as you know, markets have tanked, markets gone below 16,800. I think the level which we have all been talking, the typical textbook style pattern which we were talking about, and markets went below that, and then there was a further selling. So, what's your view on this? Could traders actually trade this below 16,800 when the markets went below 16,000? Because I think everybody had eyes on that particular level.
Yes, and if everyone seems to have an eye on it on any particular level, and that is my assumption that everyone has an eye on that level, it's better not to trade that level. It becomes a very soft spot. Um, See, markets have cracked because of whatever reason. But the fact is, prices have come down. It gapped down. It never showed any signs of any meaningful bounce back, a little bit of bounce back after the first 30, 45 minutes. And after that, it was throughout the day, no sign of any intention from any of the stocks, from any of the broad-based markets to bounce back. So it didn't even show the interest to bounce. So I would not recommend any trader, especially a trader who's got really surprised with this fall, cannot figure out what's happening, uncertain, then I would request and suggest not to try and buy. But then there are people who understand the market better, understand their psychology better. They have been in the market for a fairly long span of time. And I would suggest they should start doing their homework. Don't try to pick a bottom. The market will prove you wrong 9 out of 10 times. Right? Once you will get it right and say, देखा मैंने बोला था ना, मैंने एकदम low पे खरीदा. But you will never say that no dafe I went wrong. I
Hmm.
wouldn't suggest to buy a falling knife. This is not a knife. This is a sword, and this was due. Means we, of
Yes.
course, all humans, all chartists, everyone at the hindsight will say, "हाँ, हम लोग ने तो बोला था." But when it happens, it happens. We are living it, and as we live with this fall, and I think this is, I won't say this is the beginning, but this is beginning to get a little difficult, scary, and different. Up tak jo bhi fall hua tha, whatever fall we had faced since mid-Jan, I think it was okay to deal with. It was okay. It gave us bounce backs. Now with the gap down and a 4.5% crack, whoever has entered the market in the last 2 years have not probably seen this kind of a market. So now it is getting in a different zone. So खरीदना नहीं चाहिए from a short term point of view. If you're a medium to long term player, you can start accumulating some large cap stocks which you feel are good, or some ETFs. Myself, disclosure, I got into some Nifty ETFs, and I love this kind of markets to buy those index funds.
Right. So, Abhijit, could we say something like we've been seeing the FIs being sellers, major sellers since the last 3 months now, from December? Can we actually conclude that they actually knew it? They could actually sense this fall, and earlier what we were talking of, that yes, it could be a bull run, consolidation, and now we simply, after today's fall, we can talk about that no, it's probably a distribution which happened and there was a breakdown today. you know
See, personally, I've been posting my views on the market, and I share in our Stockage Club also
right.
periodically. And
Yeah.
I've been suggesting and requesting to stay away in the sidelines. And my view is not primarily because of some kind of a geopolitical event or some kind of a war or crude prices. The way I'm looking into it is from December onwards. If you track what's happening in the US markets, the bond yields between the 2-year and the 10-year bond yield of US markets have come like this close. And then
Right.
then we call it a yield curve reversion. Essentially, the inflation in US markets is at 7.5, which is at a 30-year high. And this has exactly started from the December point as we are talking right now. So, what is happening to the internals of the market has been happening for quite some time. And the markets have given enough signs, signals in terms of macroeconomics, in terms of price. If you take a look at the Dow Jones, S&P 500, NASDAQ, Meta was down 26% in a day. So there was enough signs that equity is losing its shine primarily because of the debt market, yield curves, etc. And we saw this correction not only in the US market but across the globe.
Right.
And yes, we had our fall, then we had our bounce back, and now we are doing a catch up game with the rest of the markets. So it's not a big surprise. And Suchi, I feel that if we get a yield curve reversion in the US markets, and if things starts to get wars there, which is very likely. It will take some time. What do I mean by this is if this is the worst case scenario right now, then to recover from it, it takes time. It doesn't happen in a week's time. It is not March 23rd, 2020, when all of a sudden, like a V, the market just bounced back and
Right.
doubled itself. So, I think there is still some pain left, and pain would be both in terms of price and time. Price, I cannot guess. I can draw some levels and expect these levels to come. But my personal experience in the 2008-9 crash was we draw levels and the markets come, okay, here we go, and the supports are gone and gone. So, how bad it can get is my guess is as good as yours. But the the parameters, the events are not suggestive that equity markets are going to bounce back anytime soon.
Right. Abhijit, I think that is one more difference what we saw when there was the pandemic fall. It went like a falling knife and then it rose up. This time, I think there was a time-based correction also or a fall. I think in the last 2, 3 months, the market has not really been doing anything. And
Right.
today, eventually, that range broke and we saw that fall probably.
Right.
So
Right.
there
Exactly.
was so there was a time based fall as well as the price definitely which we've seen. So
Right.
Abhijit, how can we actually understand that yes, the bottoms will have been formed, or investors or traders could get ready, and some kind of bottom fishing or accumulating could be done? Any specific signals which a trader or an investor should look out for? You could also share your screen and show specifically from the past data or however.
Not in this case. I'll share my screen to take care of your other
Huh.
question. But in this case, Suchi, the hardcore, honest, true answer is you wouldn't know. You will get to know only in the hindsight. Like you never could know that this is the top. You can guess, and I say 1 out of 10 times you'll go right and you'll feel good. But whether this is a bottom or not, you will only get to realize it once the bottom is made.
Mate.
That is hands down, period. Now, once the bottom is made, and I am not going to predict the bottom, neither am I trying to catch the bottom. But once the bottom is made, what kind of signs should I start to look at? Look at signs like uh, in the bounce backs. In a bear market, we do see bounce backs. The quality of the bounce back is extremely important. The length of the bounce back, the quality of sectors, stocks which are participating in the bounce back. Um, you can look at relative strength also, that if there is any sector which is holding out better than the rest of the market, and what is that sector. Um, and yes, markets will be reactive. They will react to the war events. I think soon they will start to react with inflation numbers. They might start to react with the price of crude. So
Yeah.
you have to keep these things in mind. You have to take a chance. You have to, stretch your neck out and put some money that, okay, I think this is a good place to buy. Maybe it can fall 5-10% more, but this is from where I will start to accumulate. I'm not trying to time, but I'm trying to create my portfolio. Don't try to pick the bottom, but you will get the sense. You will get the sense. If you watch the news channels and read the newspapers, you will not get the sense. You'll get the sense much later. So you need to look at the internals of the market little closely. I think quality of the bounce backs and the kind of stocks which are bouncing back and not coming down, that's, I think, will give a better clue.
Okay. Abhijit, I have a question by Mr. PS. He wants to sell Nifty ETFs on pullback. What is your view on this?
So, PS, if you're looking to liquidate your Nifty ETFs on a pullback, um, depends on your approach based on which you bought Nifty ETFs at the first place. If you ask personally, my approach is I buy Nifty ETFs or bank ETFs or IP ETFs, whatever, not from a trading point of view, but from an accumulation investment point of view. I only sell them when I have to. I don't trade them. But that's me. Now, PS, if you need to ask yourself, why did I buy Nifty ETF in the first place? To make money. To means that you would buy ETFs at a lower price and you'll sell ETFs at a higher price. And now, yes, if you get the bounce back and you want to make some, exit from that holdings, you can do that. You can definitely do that. But at least know what you're doing. If I have bought ETFs for the sake of accumulating, I will never sell. In the sense, I will never sell because it is going up. I will always buy when it's falling like this. As I said, I did manage to add some ETFs to my portfolio today also. These are perfect, excellent days to start adding ETFs. Very difficult. I get really scared to add stocks, Shuchi, honestly. But I've got a lot of, as in confidence, adding the index as a fund rather than any particular stock.
So, Abhijit, I'll just ask you a very layman's question, which is coming into my mind that, every investor knows that this is a right time probably to start an SIP, do some SIP at this kind of falls. And yes, ETF is a very good option, but that natural biasness is towards the stocks which he's already holding in his portfolio.
Yeah.
So should he be actually, since the stocks which he's probably holding in his portfolio is based on certain fundamentals and some thesis,
Yeah.
and those theses, if they still hold good,
Right.
should he be actually doing some kind of averaging there, or probably still look at those ETFs only where the risk reward is much more favorable probably?
See, ETFs, it's not about risk reward. ETFs will not give you a great risk reward in relation to stocks, number one. So ETFs will give you the confidence because you're buying a bunch, a group of stocks, and eventually they will bounce back. We don't know whether this large cap or mid cap will bounce back or not, and when will it bounce back. And many a times we see that we only hope for it to bounce back and it never bounces back. And few years bounces back. So, as I said, if you pick up 10, 20, 25 stocks, you should be ready that 2 or 3 is going to go down the drain. That happens with not only me and you, that happens with even the biggest of the funds. They all know that, right? So, should you add stocks in this fall or not? And this is applicable to very few people, as you had mentioned, that you have a list of stocks which you understand the companies and maybe the fundamental parameters, etc. And you have some understanding and faith in them. And now you're getting it at a discount. So you will be emotionally excited to buy at a discount at a cheaper rate. Mall pe jaise discount chalta hai, 40, 50, 70% off, something like that.
Yeah.
You can do that provided you know what kind of stocks you're buying and why you're buying. And still, I would suggest you should keep a threshold, let's say a 52-week low or something like a 55-period weekly average या फिर 250-day moving, मतलब एक threshold के नीचे मैं उसको हाथ नहीं, because history has taught us that the best of stocks can also go down the drain. So I will keep on adding this quality stock, but I'm not going to touch it below a certain level, let it fall, let it bounce back, but not below a certain level. So that certain level, I think a yearly average, a long-term average, or 52-week low. See, if it's a good stock, it's going to bounce back. If it's a good company, it is definitely going to bounce back. But averaging out करने का one major problem is as it keeps on falling, how many times will you average out? You know, last bear market में 2008 में हम लोग बात करते थे ऐसे कि ये स्टॉक 2 बार आधा हुआ, 3 बार आधा हुआ, अरे ये स्टॉक तो 4 बार आधा हुआ. You know how many times had it got half? So
Yeah, because
it's
of the time it took to make that
yes,
bottom.
yes. So it might, sound funny the way I'm putting it, but it's not funny when you have a portfolio and you're seeing your portfolio money depleted
Right.
by 20, 30, 40, 50%. And then you keep on buying. You don't add oil to the fire after a certain span. So do it if you understand what you're doing, not because someone on your YouTube live is asking you to do it. So if you're adding Pidilite or Page, then you better understand Pidilite and Page, or else if you don't have much understanding, dimag mat lagaiye, get into funds. You'll be much better and safer.
Right. I think that actually sums it up all. So we have a question on gold ETF that, how much percentage should we invest in a gold ETF in a portfolio, as probably people look at that as a hedge. And
9 to 10.
especially
Yes, please complete.
no, because I think gold was shining 2 years back, 1.5 years back, and it has been complete. It has given negative returns when the equity markets did well since the last 1.5 years. So I think again, the investors are always in a dilemma that should we have gold at all in our portfolio, and if yes, how much?
9 to 10% if you want to. The only thing that shines about gold is the gold when you look at it. As an asset class, there's not much to shine. You would love gold, like every Indian household woman would definitely love gold. But if you use the investor brain of yours, the return seeking mind of yours, if you take a look at the 150 years day data of gold returns, they are not that good at all on an average. Of course, by far, equity beats it by twice that amount. If you look at around 15% CAGR, gold will probably give you what, 8%, 8.5%, 9%. Uh, yes, in old times, gold standards, monetary policy, how much the central bank can print money depending on the how much they. So that kind of history, though it is not present anymore, all of it is fiat nowadays. That kind of a history is still there, and we perceive gold as a safer haven, as some kind of a hedge. And
Right.
I think it is some kind of a placebo for the market when it works because I believe it works. So
Right.
uh, gold goes up because everyone sees gold as a placebo, right? As a
Hmm.
safer haven. So in that regards, I personally would have around 9%, 9 to 10% gold. One thing you have to understand, I'm a married person, so I told my wife, I tricked my wife 6 7 years back that why let's create a portfolio of gold ETFs, and whenever you feel like getting something, you just break it down. So and it will act as a hedge to my portfolio also. So to answer the question in short, I think don't cross 10%. You can keep it lower also, not a problem. But 10 is max.
Right. Uh, Abhijit, there's one more question which comes to my mind here is how would a trader treat this market fall? Will it, because the short term trend definitely has gone bearish, and the market seems to look very, very tough for a trader also to trade because of the volatility which is there. So how could a trader see the markets? What are the important levels which one should look out for to play those specific trades?
All right, so let me quickly then share my screen. Share screen, share screen, um, entire screen, and let me check whether this will work or not. Can you see my charts?
uh yes, now we can.
Yes. So trading from a very short-term trading perspective, it has been fairly tough, not just now, but I
Yeah.
would suggest since this particular bounce back. Let me show you. Since this particular bounce back that we had, and I would personally say all this time it was particularly pretty difficult. In fact,
Yeah.
not only that, this bounce back, the extent of this bounce back was also very, very sharp. So trading, particularly short-term trading, has been quite difficult for I think a month or so. It's nothing new. Now we need to understand that traders are primarily predominantly long only, most of them, right? So
Yeah.
going short or timing the short, downtrends are volatile in nature, is a little difficult. So now it's going to get more difficult trading. Now let's talk about levels and why do I say it's going to get more difficult. The reason it's going to get more difficult is the market, the price has traveled a lot of distance in a very small span of time. We're looking at 1,000 point overfall this week. This is a weekly chart of Nifty, and the Nifty has fallen 1,000 points. So any kind of last week's high, 3 weeks high, what was the previous swing high, those kind of approach is going to be very difficult because your previous highs are significantly away from where you are right now, right?
Right.
So it's going to get difficult. When times get difficult like this, when the volatility is too much and you have to trade and you want to trade, you are a trader per se, what I tend to do is I reduce the quantity. I reduce the risk management. I protect my capital because, like all corrections, like all uptrends and downtrends, it will pass. It will finish itself, and it's like a cyclical thing. It will evolve again. The point
Right.
is, how bad is this fall? Is it going to take us to this Fibonacci cluster? Is it going to take us to this point of control? Are we going to see this Fibonacci cluster? I honestly can only do this research and homework and draw some levels and look closely whether price comes or not, look closely whether it bounces back, but I cannot 100% predict.
Yes.
So trading is going to stay difficult. I'm not telling you to stop trading. If you are a newbie, if you do not understand markets that well, you've entered the market over the last year or so, try not to trade too much. If you have been hurt badly by this fall, if you're sitting on a big loss because of this fall, which you couldn't predict, and you were sitting on some positions, try not to do revenge trading. Um, Number two, try to trade less. If you cannot trade less, trade lesser quantity at least, right? And try not to become an investor because you started as a trade. This will happen. People would
This
have
will
traded
happen. Yes.
short-term longs and now they will sit on it for a long span of time. Try
Right.
not to do that as much as possible.
Uh, Abhijit, there's one more thing which I would like to ask you here is that many times now, good companies, especially the stocks which have been the winners of last 1.5 years, they seem to have been at very good supports. There'll be a lot of stocks which will come at good weekly supports or monthly supports from where their actually entire rally had started.
Yes,
If we talk about indicators, probably they would be all not giving any positive sign towards it.
right.
So, even as a trader or an investor, it's always a dilemma कि यहाँ से वो bounce back करेगा कि वो इस level को भी break कर देगा. So, इस dilemma को कैसे handle किया जाए? Because if it breaks that important level, again we can see a good fall from there also.
Let's take a stock. एक stock
Yeah,
ले लेते हैं, and I think it will be better for us. So let's say I've
sure.
taken ICICI Bank. Okay.
Right.
And those who are listening to us today evening and those who take trading decision based on their charts and you've understood charts, you've learned from someone or somewhere or self-learned, spend some good amount of time from now on with the long-term charts. Take a look at the weekly, monthly charts because what the market is doing is not a short-term phenomenon. It is a structural movement that is happening. So I will not put in too much time in the daily chart of iBank. I will bring you to the weekly chart of ICICI Bank. Okay. Now, let's try and understand. So the market bottomed out. This was the coronavirus first cut,
Right.
and then the stock bottomed out, and we had a phenomenal run. Okay, let's first understand the extent of this phenomenal run. This extent of this phenomenal run is 206% for ICICI Bank, from a low of 260s to high of 830s. All right, this was the big move up. In this big move up, okay, how many times did it correct? I can see a short-term correction here. This was around 25%. Next correction happened here. This was around 20%. The third correction, the third meaningful correction that I can see from a high to low, this high seems to be a little too exaggerated. I'll take this one. This is around, again, 18 to 19%. So three corrections all in the line of around 20 to 18 to 20%. This is around 13.5%. And now what
Right.
we are going through in ICICI Bank is 15%. So when you bring in a little bit of perspective, historical perspective, it doesn't look that bad, because the stock did fall 20%, 20%, 18%, 13, 13.5. Sorry, now it's around 13, 13 or 15%. The problem is probably you're stuck here. Of course, if you're stuck here, then this correction will hurt. So this correction is natural. The uptrend, the strength of the stock, etc., it seems to be fine. Now, how do we time it? How do we know how much can it fall? As I always say, you cannot. All that you can do is you can do a bit of homework, preparation, and let's see how it unfolds. So for ICICI Bank, what kind of preparation should I do? So I can observe that it had kind of tried to make a double topish kind of a pattern here. If I mark
Right.
it for you, it would be something like this. This was the range. This is the range,
Right.
and it's at
Right.
the lower bottom of the range. And if this is the range, we can clearly see this. What we should do then is quickly find out that what is the length of this range. Is around 18%, 20% kind of a fall. So upside down, 18, 20% kind of a fall. If it opens up, generally pattern targets behave like this. This is this kind of a level, which is around 560, is suggested by this kind of a pattern. If this double top pattern works out, तो ये यहाँ पे
Right.
it should bring the price down there. Number one. Now, then I find around 560, 550, is there any other evidence? For example, if this is my 550, 560 kind of an expected long-term, medium-term level for iBank, अगर मेरा ऐसा सोच है, then what happened in the past? So I can see over here that yes, the lows of April 21 was in this level. If I stretch it further, the highs means we are talking long-term levels, okay? Because at 700, talking about 550 is a significant fall. But then we are
Right.
also talking from a significant point of view. We are not talking day
Right.
after tomorrow and the next month.
Right.
So
Yes.
550, 560 turns to be a pretty decent level. Another level that stands out purely based on price is this one. Because I can clearly see this is the breakout, this is the retest of the breakout, and the price never came down to this level. Now it will definitely, high chance, it will definitely come and tease your 660, 670, 680 level. Right? Now, the final point is, now I can draw some volume profile. I can further improvise my study by adding some more tools. I can check the volume profile, what kind of volumes happened at what kind of price. I can extend it much further by drawing some Fibonacci retracements. So there is no end to this. There is no end to what all I can add to my chart just to find out a support kahan ho sakta hai. So let's say I've taken a look at past highs and lows. I have drawn some Fibonacci retracements. I have drawn a volume profile, and this is how I have kind of broken down the last big move of iBank. Now, now I can see this range. I can see definitely this range. Why I say definitely this range? Because I have a Fibonacci. I have my pattern target, and I have a price low. So ये जो range है, this also is pretty strong. And उसके नीचे
Right.
there's it's a little too scary after that. So now let's see what happens. Now let's say The prices starts to come down slowly, bounces back, comes down, and I know, okay, prices are at my supports. Now, if you are an investor who can take a little bit of risk, you can add a little bit. If you want to wait for some confirmation, you wait for some, your indicators will start to develop some kind of a divergence or crossover or
Right.
whatever. There has to be signal on your chart on the price, which I personally as a mentor I use the word evidences. Charts में ऐसा कोई evidence होना चाहिए. There should be some reason based on which you are buying. So when that reasons develop at the supports or from the levels which you expected as supports, then you start to nibble. Now understand, you're dealing with a bear market now. You're dealing with a sharp downward pending market. So you should
Right.
always nibble. You should always buy, let's say 50% first, then another 25%, then another 20%. You should always keep some buffer.
Right. Abhijit, there is a question by Mr. PS again, that since we mentioned that it is not really like a V-shaped fall and a V-shaped recovery, so is it a wise idea to actually book out some of the profits, portfolio profits in good stocks in a pullback, or should we just keep holding?
There are two answers to that. Number one is, if in your portfolio, your medium term to long term cash market portfolio that you're holding, you should not be reactive like the market is right now. You, as an investor trader, should have specific levels for all your trades, investments, that if this stock reaches this kind of valuation, price, EPS, PE, indicator value, I'm going to come out. Means your decision making should not be a function of Russia, Ukraine. Your decision should not be a function of yield curve reversal. Your decision should not be a function because the market has crashed. Oh, what should I do?
Hmm,
ठीक है?
hmm, hmm.
By this, I mean that when the prices were going up, why didn't you just book out some? Now you're thinking to book out because the fall has happened. It's like when your health was showing signs, you did not pay attention. Now, when the shit has hit the fan, now when your health is really bad, now you're rushing to the doctor. That's exactly what happens.
Huh.
See, I'm not kind of blaming, but this is a very common human behavior. And
Hmm.
with common human behavior, we are not going to sustain in the market. We are going to get washed off. So we need to behave a little differently. So a little different would be sorted, have your decision making. Now coming to a softer answer. I'm sorry, I'm very known to give hard answers like this. So in a softer note, considering that this fall has the potential to exaggerate itself further on the downside, which you do not want to foresee in your portfolio, no one likes to foresee, right? Then, yes, in the bounce back, when it happens, whichever extent it happens, in those particular stocks in your portfolio which have not been doing good, which are underperforming, I think you should target them first. If there's any stock which is doing relatively better, I don't think you should touch them, or you should just liquidate them partially just to add them back. The only issue in this kind of a thing is, as we cannot time the market, getting out of them, getting back in again, this becomes difficult.
Abhijit, there's one thing which I've always, stuck up and, made many times a mistake, is that how do you actually differentiate between a pullback and a reversal? Because these times, since especially in the last 2.5 years, the kind of volatility which the markets have seen, each time there's a pullback, the strength or probably the intensity which we say is very, very fast. And that day, probably you will see all the indices are green, all the stocks have done well. There's a good, 10-12% rally in all the
Right.
stocks. And then suddenly, again, there is,
Yeah.
the
So
major trend plays again.
right. So you have to have some faith in the price, in the sense that I have again come back to that weekly ICICI Bank chart. And what
Hmm.
I'll do, I'll just clear this just to give you a clean picture. So the point is, when ICICI Bank was falling like this, and this was the bottom, it bounced back, then it fell again, then it's bouncing back again. Now my $1 million question is, how do I know it will not fall and go up? Correct? How
Right.
do I know that from here, if it bounces back in the next 2 weeks, this bounce back will not open up or go up? That's a big dilemma. This is a
Right.
dilemma with everyone, irrespective of his portfolio sizes, is 1 lakh rupees or 1 lakh crore rupees. But we need to have some faith in price. We need to have some faith in price, in the sense that price itself will tell us whether it's improving or not. What do I mean by this? Rule number one, thumb rule number one. When you clearly understand that you're in a falling market, and you know a falling market will always give a bounce back, never try to trade the first bounce back. Rule number one. Never try to pick the bottom. Wait for the next fall to come. Wait for the next fall to come. So if it falls like this, it gives a short-term bounce back. I am not interested to participate in this bounce back. Let it come down. And if it has weakness further, then it will break further and come down. It will come here, it will come here, whatever, I don't know. But wait for it. If the index or the stock wants to go somewhere here, somewhere higher, then from this price, it will reverse. It means it will definitely break below this level. Means this was the level it reached in the first bounce back. Now it has gone above it. Now you take a look at ICICI Bank. Can I
Right.
mark this level? Can I say
Yes.
that after the fall, this was the first bounce? I am not interested to participate in this bounce. Who knows? Now the price comes down. Okay, fine. Now it bounces back. Okay, that's interesting. Will it go above this and sustain? Yes, it went above this and sustained. These are the kind of flushes that you have to deal with. Kuch nahi kar sakte. You can't expect. And then you see it picked up. Try to make money here. Don't try to make money here. What is the big deal? You want to make money, right? Means if we want to make money, right? So let this go. Let this pass. Let it improve. And then if the stock has significant upsides, the stock will give you enough chance to make some returns here, enough chance to make some returns here. What is this mentality of
So
getting into a falling knife? Wait for it.
right.
Patience is a virtue.
So, Abhijit, can I conclude that every fall would have a pullback and then again a follow on fall, something like that, and it is just not that fall and straight recovery. Can I make that conclusion for
No,
all of
it's a
us?
wrong conclusion, because then at times you will see V recoveries also. It's better that we not conclude anything in the market. Markets are very flexible, and it is known to surprise us, which is not much of a surprise.
Hmm.
But having said this, forget me, forget the theory. If you just spend 1 hour with the charts, you will know that a stock, if it has to go from one point to another point, it does not go up like this. It
Right.
goes up a little bit, it comes down a little bit, it goes up more, it consolidates, it does all the different dance, right? But
Right.
if it has to rally, then the upper sides, the length of the rallies will be more than the length of the fall. This is an
Right.
uptrend, and vice
Certainly.
versa in a downtrend. The length of the falls will be larger than the. This is
Larger.
exactly what we're noticing now.
Right.
So another common thing that you can focus on is you can start evaluating, marking, and understanding the length of the rise. For example, let's say down the line, in some time in the future, a stock or the market bounces back. So you find out in terms of percentages, and in terms of number of days and time, how much percentage did it bounce back in how much time, and how much did
Right.
it last time bounce back in how much time, how much did it bounce back in how much time.
Hmm.
Okay? Once you start to see the shift, that percentage wise the gain is getting bigger,
Right.
right? Then it gives you a nice time, and also it's not giving away too much. जब ये next correction आ रहा है, it should not give away too much. But we should not conclude. ये जो मैं draw करके समझाने का कोशिश कर रहा हूँ, that I'm doing here, it is not hard coded. Different stocks, different sectors, and different market conditions behave differently.
Right.
But prices will improve to mark a reversal and bull market. Prices will fall and deteriorate to mark a bear market. So stick to the price.
Abhijit, I think whoever has studied technical analysis, I think the first thing which he goes through is the tenets of technical analysis, which says that history does repeat itself, and you know. So when we talk about history, when we talk about situations and charts, can we really look out the chart structure in previous war situations to get a fair idea about probably how it could behave this way? Or because there is lot of digitalization and all of that, we might not really get that clear picture?
Not a very smart thing to do, in the sense that um, the market's history repeats itself, in the sense there's a deeper understanding to this. Is that price falls and price rise and greed and fear and panic and euphoria, this is the history that repeats.
Right.
The fear that few people are experiencing after today's fall is very, very similar to what few people experience in Jan 2008, in Feb 2020. That
Hmm.
fear, that greed, that complacency, that uh,
Emotion. Yes.
emotions, that bouquet of emotions, this is what repeats. And this
Right.
repetition in price. Now,
Right.
when the Gulf War happened, or when there was a mild geopolitical tension between India and China, or what we are doing, what we are dealing with now, they are not history repeating itself. Because when that war happened, what was the macroeconomic condition of the market? What was the rate of interest? What was the other factors,
Hmm.
whether the economy will be able to digest this fall or not? It depends. In that case, अगर आप you mark, अच्छा यहाँ पे war हुआ था, in that time it fell this much, तो यहाँ पे तो उतना ही गिरेगा. That's not a very smart thing to do, because in that case you also have to understand the various other metrics of it.
Right. I asked you this question because, many a times every year the budget comes in, and normally, we see that what happened in the last 5 years of the budget, or every time there is elections every 5 years. So,
Hmm.
you normally tend to see that how the markets have behaved. So
Hmm.
that is the reason why, it came into my mind that will war also be comparable, or no, it is
अच्छा,
just the emotions.
I can allow me to ask you a question.
Yes, sure.
You've been in the market for some time, right?
Yes.
And being in the market, either doing trading, investment yourself, or advisory, or research, whatever it is, you create a view on the market, on the stock.
Yes.
Now tell me honestly, will I be wrong if I say that 50-50, or most of the time the markets prove us wrong? The market
Correct.
surprises us big time.
Yes, absolutely.
If that is a yes, and yes after that added absolutely, then how come you do a past historical research on last 5 times budget, draw an average or a mean, and say इस बार भी वैसा ही करेगा?
Hmm.
Maybe कर सकता है, maybe, but then the market has a very uncanny habit of surprising us to prove us
Right.
wrong. When we expect a rise, it tends to fall. When we expect a fall, it tends to just do something different.
Right.
And checking the past events will give us some kind of a sense, like I did right now for iBank. We just
Mm.
saw 20%, 20%, 18%. It does not mean that this time also it will stop at 20%. It can be 40%, it can be 13%. But the moment you draw 20%, 15%, you create a some kind of an expectancy, some kind of an expectation from the market. And we all
Right.
know, whether it's market or humans, the moment you attach expectations, you're bound to suffer.
Right. So I think that gives a perspective that how to look at this fall, how to look at the situation, and plan your investments, plan your trading activities if at all. Wait for proper sim evidence, as Mr. Abhijit says on the charts. And I would be glad to tell you guys that Abhijit is associated with us on Stockage Club, and he regularly posts his views on the broader markets as well as some stock ideas which he shares. And you could all be also a part of this club. You all can avail this code SR25 to avail a 25% discount for today to join the Stockage Club subscription, right? And Abhijit, I would also like to tell you that we are running a special discount today for this month, SR25, a 25% discount on all your webinars and courses which you have, because Abhijit has been mentoring students regularly since the last, I think, 12 years, Abhijit, or more.
The mentoring part, yes, around 12 years. The training part,
Yes.
may around, I think 15, 16 years. But honestly, I don't count anymore.
Yes, I think even if I ask you the number of students you've trained, I'm sure you must have lost that
Okay.
count also.
No, no, I
Yeah,
never counted. I
yeah,
remember the faces, I remember the questions, but
yeah.
I don't know the count. I've been
So
training
he's
since 2005.
right. So he's trained many students and he's taken up lot of webinars, specific webinars. Course we have a technical analysis course, live course with him, where he actually talks about this psychology behind the trading. Because what looks so simple, what looks so bookish doesn't really happen, and that is where a mentor is required. That is where proper training is required. So yes, you guys can explore that, and we are running a discount on those for this week till February. So please do have a look. And Abhijit, some last important levels which my audience wants to know, that this level, yes, to look out for on the Nifty and Bank Nifty.
So let's talk about the Nifty then. I was drawing some long-term volume profiles to figure out those top 15 stocks,
Right.
but this is we're looking at the weekly chart of Nifty,
Hmm.
and it's turning out to be a complex correction. In the sense, when I say complex, I mean a leg down, a leg up, and now it's opening up on the downside. So when it
Right.
opens up on the downside, that's exactly when I start to draw some Fibonacci and try to figure out some levels. And as I said, I've been sharing these kind of views. I do that periodically, and I've started doing that in Stockage Club also. So this particular level is the first, but it's a very I think nominal in front. It's just below that 16K mark. It's nothing too much from here on. 15,900 is the level, but it's got a zone there. The market did spend some time in this particular zone before the
Right.
big breakout. So whether the price will come here is very likely. Whether the price will stop there, it's very difficult to say right now. When you have a fall of 1,000 points in a week, it's not a fast moving car. It's like a fast moving train. It will just rush through
Right.
these levels. It has the potential. It has a weight behind it to just rush through that level.
Ji.
Try and understand another structural thing, that when panic hits and when the margin call comes and when the broker starts to sell the positions, your pledged positions, etc., they will sell at the market. They will not wait and place limit orders. And this
Right.
is what that is what creates a panic selling. It is like it feeds onto itself. It becomes like
Right.
a snowball effect. And so I'm not saying it will happen this time. Don't get me wrong. I don't want to scare who's listening to me. I'm just sharing what I experienced, felt in my past with the market, right? So the first level is this 15,900, but I strongly feel it will come down and definitely tease this. The other level wherein the market did spend some decent amount of time was here, which kind of corroborates with the point of control, which says that yes, in this space, in this zone, the market did see some good volumes.
Right.
And this we are talking about sub 15K. This we are talking about levels which will start to talk about just below 15K, 14,900, 14,700, etc. I would like to stop at this level. I do not. So if it comes to this level, let's try and understand. If it comes to 15,900, you're
Hmm.
looking at a 14.3% correction, which is very, very healthy. And if it comes down to little further down, which little below the point of control, let's say 14, these kind of levels, sorry, these kind of levels, then you're looking at a correction of 21, 22%. Jo ke is a pretty decent correction in a strong bull market. Anything beyond this becomes tough. And anything beyond that, I have couple of levels, which is 13K and all. But as I said, these are levels. इसका कोई guarantee नहीं है it will come, and इसका कोई guarantee नहीं है that it will stop here. So keep a close watch, keep at these levels, and periodically good quality stocks will also hit their supports, as you were also mentioning. I was taking a look at TCS, and take a look at how beautiful TCS has this
Yeah.
cluster, this particular
Yes.
cluster,
Right.
right? And this is exactly where you can find that TCS had some amazing good amount of volumes which created in that cluster. And it stayed within there. It gave you the breakout. It gave the fallback. It acted as a support. It gave a bounce back. Now it's creating a double topish kind of a pattern. And so this cluster for TCS is a pretty good, strong support zone. Um, if it opens up towards the bottom of the cluster, we might find. But let's see how it unfolds. The stock is down like 10% this week. It's an important stock. So do this kind of studies in whatever extent you can. Figure out the stocks, the index, mark the levels in the past where the stock had created zones of congestion before it broke out. What kind of volumes happened at that kind of price, and the index will bounce back only when the stocks bounce back. When we get Reliance,
Right.
SBI, Tata Motors, HDFC Bank bouncing back, right? So keep that in mind, and all that we can do is prepare at our best, and or should I say, hope for the best and prepare for the worst. I think that's the best thing. You prepare for the worst, and you hope for the best.
Go for the best. Right. Right. Thank you, Abhijit. I think it was great having you, and I'm sure all our viewers have got a perspective how to actually trade or participate in this market. I would rather not really use the word trade, but participate and behave in this market, how to do your homeworks. And yes, I had a question from Mr. PS that, you know, should we really look at social media and news channels to get that bottom, or is it the charts? I think you must have got your answers by now. That please do your homework and ignore the social media news channel. Yes, Abhijit?
Yes, I think, Suchi, back then when the social media was not there at that extent, I'm talking about 2005 to 2010, 12. Media was primarily your newspaper, your media channels, analyst views, advisors' views. And when it used to go extreme bearish, that's a good time to buy. And when it used to go extreme bullish, but things have changed. Now,
Right,
social media, your Facebook, Twitter, everyone has a big mouth. Everyone says because he doesn't have something to say. Most of them say because they have to say rather than they want to say. So when we are in this kind of a huge uh, huge volume of views, it becomes very difficult for me and you, Mr. PS, to take a decision based on that. So a good, sensible strategy would be shun it completely. Do not follow it. And if you decide from today that you're going to trade based on yourself and not some social media Twitter handle or some YouTube guy who's posting videos, uh, I think you'll do far better. I do post videos. I do share my views on the market, but I share my views as a repository of what I said in the past and how it has unfolded and how I've gone wrong in the stock and etc. So, bottom line, Suchi, in this kind of a fall, when people get really hurt, their portfolio, especially those who have come in the last year or so, it's new for them, right? Uh,
Right.
don't lose heart, and just remember one thing: the only way you can gain back what you've lost in the market is from the market. If you think that you've lost a significant part of your capital today, or let's say if the market falls more and you fail to protect, um, just remember the only way you can gain back your lost capital is from the market. So if you've lost big time, probably the market's way of telling you, listen, you're not prepared, so I took it away from you. So you get yourself prepared and get it back from the market. Uh, that's the only way. I've had it so many times, and I've tried to bounce back so many times. And if this kind of a story or this kind of a suggestion you will hear from me, or anyone at any level of experience worldwide will tell you the same thing. They have shitty days, bad days, when you feel like questioning yourself, what am I doing? Am I doing the right thing with my life? And then when you recover back, you feel like you've not done it, you've kind of achieved it. So it's a long haul. Yes, just hang in there, and as I said, prepare for the worst and hope for the best.
And I think the major key takeaway was don't take revenge from the markets just because you've lost it. I think,
Wait for the right time to strike. This is not the right.
right,
If you're a long, predominantly long only trader, this is definitely not the right time. The market is extremely reactive. You know,
right,
it's going to bounce back sharp. It's going to gap down bad. So it's going to confuse you a lot. So let the dust settle. Let it do whatever it wants to do. I will
right.
get my time, and when I get my time, I will get my money back. Provided if you're in a loss, don't make an assumption that everyone is in loss. By the way, for
Right.
for few people, it's been a very good month.
Yes. Right. Okay. So, thank you, Abhijit. It was great, great having you here. And I would just like to repeat that in case if you want to hear more from him, follow his work, follow, get views on stocks and markets. You can join Stockage Club. You can also learn from him through the numerous webinars he's already hosted at Elearn Markets. You can join the course, which is great on technical analysis, online technical analysis. The link is all there. The discount coupon code, everything is there. You on the description, you will find it there. Thank you so much, Abhijit. Thank you.
Thank you, Suji. Thank you, everyone, for listening. Take care.
Bye. Take care.